2023 is here, and I thought I would review the Irish housing market outlook, Ryder Cup style. Blue over here for price increases and red over here for price decreases. But first of all, Happy New Year. Thanks for being a subscriber and all your support to date. I do really appreciate it. At the start of the year, I sent out a newsletter with my thoughts on the upcoming year in regards to house prices, some predictions, as well as some additional thoughts. In 2023, I plan to make the newsletter more of a feature. Over 500 people have already signed up for the newsletter free, so make sure you don't miss out on it. The link is below, but I thought it'd be a good idea to summarize some of my thoughts within that newsletter for the year in a video. I won't be doing that all the time, but I thought it would be a good idea to summarize the first newsletter. There's been lots of doomsday predictions for 2023 already, but heading into 2023, many of the economists, the leading institutions, private investment companies that provide detailed forecasts and reports generally all agree that we're heading towards an economic slowdown. The majority of leading institutions forecast limited economic growth or a slight downturn for major international markets. A crash has not been forecasted by many of the leading institutional investors. A few outliers have predicted a crash, but who's going to be right? It is easy to predict a crash because generally speaking, you are going to be right perhaps 1 in every 7 years. But I hope the institutional investors that are predicting a slight slowdown are the ones that are right. 2022 was one of the worst performing years for many asset classes in nearly 100 years. The stock market, the crypto market, all got an absolute hammering in 2022. Can 2023 be even worse? History would generally say no, but it is possible. The real estate market does generally lag behind stocks by about 6 to 9 months. So are we going to see a crash in the property market in a few months' time? So on to 2023, how is the Irish property market likely to perform? Well, let's look at it from the Ryder Cup point of view. Traditionally speaking, 4 leading indicators show how the property market might perform in the future: GDP, interest rates, inflation, and employment. So let's take those 4 as round 1. GDP is predicted to slow to about 3% in 2023. While this is far less than 2022, GDP is still expected to be positive in 2023, which traditionally speaking is favorable for house prices increases within 2023. So 1 point to stable prices or price increases. Interest rates, or another way to explain it, would be access to capital. Interest rates are expected to increase in 2023. However, rates are still historically low. Lending rules are also changing in 2023, allowing for first-time borrowers to borrow up to 4 times their income. Second-hand buyers are still going to be at the 3.5%, but their deposit rates have dropped from 20 to 10%, which will allow for more increased capital in the market. While it's not going to be a huge additional amount of capital into the market, it will cancel out some of those interest rate hikes. Cash on deposit in Ireland is at its all-time high. Cash buyers are dominating some markets, particularly in South Dublin. Interest rates rising would give 1 point to lowering the market price next year in 2023. However, because there's so much cash on deposit, access to capital still remains very positive. So in this case, I'm going to give a 0.5 point to each. Inflation. A huge amount of money was printed in 2020, and the world is now feeling that effect through inflation. While inflation is damaging the economy and individual spending power, inflation can make mortgages far more affordable over time if wages increase in line with inflation. Many investors look to hard assets like real estate to protect their interests and protect their wealth against inflation, therefore increasing demand in hard assets like real estate during times of high inflation. This goes to push prices up even higher. Inflation pushes prices higher, including real estate prices. So technically speaking, 1 point should go to higher prices in 2023 due to inflation. However, people's spending power is eroded away because of inflation as well, and their savings are also eroded away as well. So again, I'm going to split this point between both of them. Employment. When employment is high, people are confident about signing up to long-term loan and long-term mortgages, and people tend to buy assets. At the moment, Ireland has very high employment, but we do also have an issue where there's lots of talk about job losses in the tech sector and other sectors coming up in 2023. So therefore, confidence is going to be eroded even though we have high employment. While employment remains very high in Ireland, confidence is being eroded away, and therefore I'm going to give 1 point to downward prices because of employment. So let's call that round one. We're giving price increases 2 points and we're giving price decreases 2 points as well. Overall, the four main economic factors that generally indicate where house prices will go are suggesting that the market might be quite stable or balanced in 2023. The next round, round two, four more factors, but this time it's going to be rapid fire. Population, it's growing, which means increased demand. So that's 1 more point for price increase. Rents continue to increase, which will mean more people will want to buy. And that's another point for price increases in 2023. Construction costs continue to increase, which will mean less supply in the market and another point for price increases in 2023. Political unrest, changes in policies, changes in government leads to less confidence in the overall market. People are less likely to make long-term commitments in terms of investing or buying property, which reduces demand, which ultimately is another point for price reduction this time. So going into the final round, we stand at 5 points for price increases and 3 points for price decreases. The final round, we're going to look at global factors, again, rapid fire, and it's looking at 3 main markets. The US economy may or may not go into recession in 2023, but the result right now is less confidence, and ultimately there will be less confidence in the Irish market, which is 1 point for price reduction. The EU and the EU Central Bank is likely to increase interest rates again and is going to be very slow in terms of promoting economic growth. So again, 1 point for price reduction. Asia is likely to demand less, which will slow economic growth, reduce consumer confidence, but this will perhaps help a little bit with inflation. So I'm going to split Asia in half. So that leaves us with 5.5 points for price increases, 5.5 points for price decreases. I didn't set it up like that. It's just the way it worked out as I was going through it. I didn't mean it to happen that way. My personal view is if international factors remain kind of the same as they are, or the forecasts remain as they are, the Irish factors do point to a small amount of growth within the housing market for 2023, and I would predict somewhere in between about 1 and 3% increases in prices for the housing market in 2023. However, if there are any major disruptions within the international market, that is going to have an impact on confidence within the Irish market, which will ultimately have an impact on the housing prices within Ireland. But if everything remains the same, I do think house prices will perhaps increase a small amount in 2023. I think we will see a few different types of markets happening within Ireland in 2023. I think areas that were in hot demand because of work from home and COVID, their prices will perhaps slow down a little bit. In the newsletter, I did share a small bit of information about future investment opportunities that will be hopefully coming to light in 2023. And if you are interested in learning more about such investment opportunities, make sure you hit the link below and provide your details so you can be added onto the investor list. I can't share a lot of information at the moment, but if you do want to know more, make sure you do sign up to that list because they will be the people who will receive the information first, hopefully in Q1 of this year. In the newsletter, I also shared some details in regards to the future of real estate and what I think are the big things that will happen in 2023. When I believe that in 2023 there will be major changes in tokenization of real estate, allowing for liquidity of investment assets and easier access for investment opportunities for smaller investments, and I do hope to be part of that future as well. 2 major changes will happen in prop tech in 2023 from a construction perspective, allowing for improvements in project management, cost savings, and technology that will hopefully deliver more affordable homes. Tech will improve construction methods, will also improve the speed of delivery of construction, as well as allowing for cost savings. I think it will allow for new technology to be brought into construction of housing. Ireland may need to review its planning and development guidelines and requirements to allow for some of those changes to be adapted into Ireland. But sadly, I think Ireland are going to lag behind the rest of the world in this prop tech kind of construction sector. And sadly, Ireland are going to lose out on this because they're not going to be able to adapt and they're not going to be at the forefront of this type of technology. As I said, I want to make the newsletter more of a feature in 2023, so please show your support by signing up. Thanks for all your support so far. 2023 is going to be full of uncertainties, but uncertainties do create opportunities, so hopefully 2023 will be a very fruitful year for you. As always, thanks for watching and also thanks for reading.